And we are live for a new episode of Electrek Podcasts. I am Fred Lambert, your host, and as usual, I'm joined by Seth Wincham. How are you doing today, Seth?
I'm good.
All right. So, kind of a slow news week in the EV world this week. It was not that much to talk about. So, what is going to happen is going to give us more time to talk to you guys. So, I'm going to repeat it when we've been live a little bit longer and there's more people coming in. But if you have questions for us or any topics you want our take on in the EV world or renewable energy world, you can put it in the comment section. I'm going to get to it at the second half of the show. But still a few things I want to talk about. So when there's a slow news week, I do like to do some more in-depth reporting on things that I think are going to be impactful. And this one was an interesting one here. Is like as everyone is focused on Elon's pay package on the vote for the Tesla shareholders in 2 to 3 weeks now, first week of November. Everyone is focused on that big number, $1 trillion package. But there's something else that's happening, and I think could be as impactful, even potentially even more impactful, depending on how it plays out. And that's the vote on Tesla investing into xAI. And so I did a little report on it where I share like the pros and cons, the good, the bad, the ugly about this proposed deal. And I wanted to get into it a little bit here. So it's kind of a follow-up on this other report that I posted earlier this year about basically the timeline on Elon's obsession with controlling AI, controlling the future of AI, controlling the possible like AI God that's going to come out of this whole thing, if you believe it. And it's a clear like the timeline, like just to make it short, basically, Elon starts OpenAI. Try to gain complete control of OpenAI through trying to have it merge with Tesla, and it doesn't happen. Sam Altman gets his way instead and partners with Microsoft. So Elon exits himself from OpenAI and cites a conflict of interest with Tesla because Tesla is now launching a bigger effort to get into the artificial intelligence world. So now it is focused on AI is at Tesla. But then what happens is that he screws up in 2022 and buys Twitter for a ridiculous amount of money, which he himself admitted was a mistake, was too much money. And he had to sell a lot of his Tesla stocks to make that happen, leading in him having somewhat less control over Tesla. Like on paper, he has less control. He has like his minority stake has gotten much smaller. But we all know, if you've been following Tesla, that in practice, he has complete control over the company. But still, it gives him an excuse to worry about, hey, if something happens with AI, if Tesla is the one to deliver AGI, I might have full control over it. So what he does is he starts a private company called xAI to develop AGI and now puts all his efforts in artificial intelligence towards that, which creates a bunch of problems for Tesla, obviously, because it's technically a breach of fiduciary duty. There was resource funneling between xAI and Tesla from a public company towards a private company that he has control over as chief executive. A lot of problems comes with it. Tesla is getting sued. Well, I mean, him specifically, Elon, and the boards are getting sued over it for breach of fiduciary duty. And it's a whole mess. Meanwhile, this is happening while now there is shareholder proposal to get Tesla to invest an undisclosed amount, an amount and form deemed appropriate by the board. And it's on the ballot right now for the Tesla shareholder meeting on November 6th. And in short, the shareholders that are proposing this are giving a blank slate to an obviously captured board by Elon to invest for Tesla to use its treasury. It's a decent size, like $37 billion treasury, to invest in his own private company, which is, an unprecedented situation. Normally, you would think there's no way it's going to pass, but because of what the Tesla shareholder base is these days, it actually might. And And so what that might look like is the question. I should mention, by the way, the board is plainly not, is the only shareholders proposal that the board is not making a recommendation. All the other shareholder proposal they're recommending to vote against, but this one they're not making any recommendation, which it's seen by most people as a vote for, obviously, because everybody else is against. But I think they're just staying away from it because of the whole legal situation right now around it, and the fact that they're being sued. I mean, they are literally telling shareholders to vote against a proposal that would have an audit to avoid Tesla contributing to child labor. But this one, they're like, oh, this one, you guys do what you will with it. So what good can come out of this? Well, obviously, it's an investment. So an investment, you want a return on investment. and there is a potential return on investment, I guess, from this. However, it's just how big it is like Tesla is kind of getting a little bit late into xAI, because as the latest report states, it's currently valued at $200 billion. So a major company. So Tesla is getting a little bit late to the game. But let's say that xAI develops, the best AI out there for now, or even AGI at some point. There is real potential for return on investment here. So that's probably the only good. Though some people have mentioned the transfer of technology between xAI and Tesla, but the problem with that is like Tesla has already integrated Grok into its vehicles, and Tesla is not invested in xAI. So you don't really need an investment to have a partnership on technology. And virtually all of the automakers have integrated LLMs into their vehicles. So it's not like Tesla is just catching up at this point and using Grok because Elon is CEO of both. Simple as that. Now the bad, sticking on the return on investment stuff. Again, coming in a little bit late at 200 billion and arguably overvalued, with OpenAI is reportedly valued at 500 billion. So, twice as much as xAI, but it has reportedly between 700 and 800 million weekly user compared to xAI's 30 million. So it's like not even in the same ballpark here, while the valuation are, relatively close. So that's a problem. And again, on the other side of the good that I said is like the only real shot at getting a return on investment for Tesla here would be for xAI to actually deliver the AGI, because for everything else, for all the other revenue generating AI, like the LLMs, the AI agents, all of that is xAI is way behind the competition on that front. Not just in performance, I think, but like in actual like revenue. Like they're not getting any money from that. So it's a gamble on somehow, out of all the other well-funded, well-staffed AI company out there, xAI is going to be the one to deliver. It's a crazy bet, but it could still happen. Now, where things get a little bit crazy is that that's not going to be xAI's last investment round. So they are reportedly trying to raise between 10 and 20 billion dollar right now at that 200 billion dollar valuation, and between up until 2025, I think they launched in 2023. So for the first 2 years, they raised about $14 billion, which is a lot for a new startup. And they burned through about 10 billions of that in 2 years. And the burn rate has accelerated in the last year or so. And right now it's estimated to be about 10 billion a year. So what they are raising right now, they would technically burn through within the next year. So they would have to do that kind of fundraising basically every year until they get sustainable, which there's no one sees that happening in the foreseeable future. Like it's years and years and years away. So now you have to attach Tesla to that. We don't have any kind of these shareholders are giving a blank check to the board to do whatever they want, but we get an idea from SpaceX. Normally Elon doesn't like to dip into SpaceX money. It's like that's how it's a private company that they have a lot of control over. But SpaceX is reportedly investing $2 billion in xAI in the current round. So let's say Tesla does the same thing and invests about $2 billion, and they would to maintain their investment going forward, they would have to do that every year when xAI raises money. That's all of Tesla's current annual earnings. That's basically the rate they're earning at. It's that bad, especially starting next year. I mean, so that's the bad stuff. The ugly stuff is next level. First of all, the main thing that is probably the craziest part about this whole thing is that the shareholders were suing Tesla over the breach of fiduciary duty, or asking that Musk forfeit his stake in xAI to Tesla, because he started a company as a breach of fiduciary duty, funnel resources from Tesla to his private company xAI, and therefore it's illegal to do that. And they have a strong case because he did do that. He did do all that. So technically, there's a chance that Tesla would end up with xAI even without an investment. So that's the craziest part. But I think that the real ugly, though, is that at the current state, okay, maybe like there's a long shot, maybe xAI develops AGI, maybe. But right now, what Grok mainly does is deliver AI slop throughout the internet, produced by fossil fuel energy, specifically natural gas generators, at its cluster in Memphis. So Tesla's mission is to accelerate the advance of renewable energy through electric transport and energy storage and solar, would be investing in a company burning gas to create AI slop, which is pretty wild. It's completely against its mission, and it's
it's not all AI slop. It's like 98% AI slop.
Yeah. There's a good 2% that's actually useful.
Meme generating.
Look, I have X Premium, so I do have access to Grok. And not all the time I do this, but a lot of the time, since it's a big part of my job, that AIs are becoming somewhat useful for our jobs. I do like to every few days, when I have a query that I want to put to AI, I'll put it through all the AIs that I have, which is like Gemini, ChatGPT, and Grok through the premium X access. And so I get an idea of like which one I think like perform the best. And Grok is quite consistently the worst at it. And then you look at what Elon posts on X about Grok, and it's all just like his Annie AI girlfriend stuff, which is very controversial, and all the quick AI videos based on nothing that like no one wants to really see. It's sad. I don't know how this vote is gonna go, but I would assume that it's gonna pass. It's gonna pass because I think the investor base at Tesla right now mostly consists of degenerate gamblers they just want a crazy return. They want this crazy hope that Tesla's gonna solve full self-driving, gonna solve humanoid robots, and that Elon is a super genius that can't miss. So of course he's gonna be the one to bring AI, the AGI god, to life through xAI. So it's gonna work, but in practice, Tesla's going to attach itself to like a company that has an insane burn rate that Tesla cannot save. Like it's not Solar City level. It's crazy the amount of money that these companies are burning.
So Solar City, and it's funny because it's orders of magnitude bigger than Solar City. But what's funny, or not funny, but what's ironic is that Solar City was generating electricity from the sun, clean energy, and this is just burning gas or burning. It's the opposite.
Yeah, it was mission aligned. At least this is not mission aligned. This is Elon Musk aligned.
Right.
And another example that one of my problem with Tesla is like I don't feel like I don't want to be invested in Tesla. Because I don't feel like I'm invested in a mission. I feel like I'm just invested in Elon Musk and his promises, which is not something I'm interested in that much.
Right.
Speaking of self-dealing, we got some news too that Tesla has found some buyers for its unsold Cybertruck, and that's SpaceX and xAI, Elon's private company. So xAI was spotted taking deliveries of a few truckloads of Cybertruck this weekend at their headquarters. So they apparently are changing their fleet to that. and SpaceX is getting even more of them. They got hundreds of trucks over the last 2 weeks. Wes Morrill, the Cybertruck lead engineer, confirmed that SpaceX is currently changing its support fleet from ICE pickup trucks to Cybertrucks. It didn't say how many, but apparently they keep coming with truckloads. So it could be over 1,000 easily. So they found an actual buyer for this that's like has volume, and it makes sense. I think apparently he's also said that Tesla is also changing its service fleet to Cybertruck. That's something that I've been saying for a while. That should be the case. When 6-7 months into the Cybertruck being released, when it started to be clear that they were tough to sell, especially in Canada, there were a bunch of them in inventory. And my Tesla service technician came by in Model S, and I'm like, dude, his Model S is filled with tools and everything. I'm like, why don't you have a Cybertruck? It's like, I know. I mean, I've been saying the same thing. So glad to see Tesla is actually making a move on that front. I could see a full decked out system of tools and some space for spare parts in there, and could be a good setup. All right, we have a few more news items to discuss before we jump into the comment section. So as I said earlier, it's a slow news week, so not that much to talk about, but means more time to talk to you guys. So if you guys have any questions for us, any topics in the EV world or in the renewable energy world that you would like our take on, so question, comments, you can put them in the comment section right now. We're live on YouTube, Facebook, on X, and we're going to be able to take the question in just a few minutes. All right, let me go back here. Yeah, Norway announced mission accomplished on its goal to go 100% electric. So that comes with a change in the incentive structure, which, Norway, we always use Norway as the example that you can go all electric nationwide. Obviously, we know that Norway is a pretty specific situation. It's a very wealthy country. Funny enough, a lot of the wealth come from oil, and they go all electric first. The classic drug dealer mentality of I don't get high on my own supply thing. They embody that when it comes to fossil fuels. But their plan, we praise their plan a lot for. They didn't just go with electric vehicle incentive, which they are. There's purchase taxes, VAT are not applied on EVs, which was a big deal. While they are very high taxes on gasoline vehicles. So that was one of the big things. It's not just incentive on the EV, but let's tax the vehicles that are more polluting, which makes sense. And there was HOV lane parking kind of incentive too. That they work quite well, those two, if it makes sense for the specific place. And it helped Norway become by far the leader in EV adoption per capita. In last year, they were at 88.9% all electric. They were already over 90 when you had plug-in hybrids. And this year, they are consistently hitting 95, 97%. So you're literally end up having a few hundred gasoline cars sold every month. So it's really just a fraction. So this week, Finance Minister Jens Stoltenberg said we have had a goal that all new passenger cars should be electric by 2025, and we can say that the goal has been achieved. So they're not officially at 100%, which we can let it slide. Obviously, it's pretty decent. They're all right, we achieved it. So now what happens? Now we need to cut the incentives. So what they announced is that currently they're doing a phase out. So there's no VAT being applied on EVs that start below 500,000 Norwegian kroner, which is about 49,000 USD. So all the EVs that are below that don't have that. Those that do are over. They want to reduce that to 300,000 Norwegian kroner, which is about $30,000 USD. So that would make it so that a lot of EVs now would have that, and a lot of the cheaper vehicles would still be exempt. But that would just be for 2026. 2027, it would end completely. But they would increase. They didn't say how much though. They would increase the taxes on gasoline vehicles too. So even though you would start having taxes on EVs, it would still be lower than the taxes on gasoline vehicles. I think it's a pretty decent approach. However, there's some pushback, obviously, from the EV Association in Norway. Would want a little bit an extended phase out, which I think could make sense too. Like, we're talking about 2026 and then 2027, we right away with full taxes. Maybe they do 2026, okay, as they say for the prices, and then or maybe you go at 40,000 USD instead of 30,000 USD, and then 2027 you go 30,000 USD, and then 2028 you go with the higher taxes on gas versus EV. I think that would work, because obviously now they are at roughly 100% new vehicle car sales being electric, but I think they are at 40% or so of the existing fleet being electric, which is still impressive as hell. Like, we're nowhere close to that in everywhere else in the world. I mean, I would assume we're at less than 5% in America. So it's but you still need to keep that going to get the momentum to go all electric as soon as possible. So you need that 100% to hold, basically. So now 2026, I think it would still probably hold, because of I think people will just go with the lower priced EVs. But then in 2027, the market becomes a lot more competitive, obviously, with gasoline vehicles. The biggest advantage that they have is like all the distribution network in Norway has shifted to electric vehicles. So now it wouldn't be impossible, obviously, especially for the legacy automakers that have both ICE and EV sales to just change their mix. But it will not be exactly easy either. So I think it's going to be interesting to watch, I think, in the next few years, right? To see like how it holds up in Norway.
Yeah, I mean, you would think once you went EV, you wouldn't really want to go back, but it's I guess it depends on how the incentives go. I mean, I'm sure there's some, like Porsche fanatics that really want a 911, or some guy who goes out on the tundra and needs 700 miles of range. I don't know.
Yeah, we're gonna get a good idea of like what was the really impact of the incentive, how they hold over time. Is it just the incentive, or as the mindset of the consumers really shifted through that period of time? I think there's a little bit of both. So I wouldn't be surprised that if there's a little bit of a pullback, especially in 2027. But I think the goal would be that the pullback is no more than like 5%, let's say.
Right. They should keep a really close eye on it. They don't want it to, they don't want to lose. Also, you have to wonder what the state of, gasoline service stations are there.
Mm-hmm. They close?
Yeah. I mean, we've talked about how they're closing. Is there even enough to sustain gas cars there? I mean,
yeah, but like if they go back to, let's say, 90% new car rate being all electric, it still lowers over time the current complete fleet of vehicles in Norway. So I think it's clear that the demand is going to keep going down for petroleum in Norway. But yeah, it's something to watch. It's going to be fascinating to watch the full transition.
They're kind of like the canary in the coal mine, sort of, but in a good way.
And they were the canary in the coal mine for all new car sales being electric, and now they are in canary in the coal mine for the entire existing fleet being all electric, which is even crazier. So that's Norway. And meanwhile, if we go to the US, things are not as cool because the tax credit has gone away and the market is cooling down. And now, as we expected, we're starting to see the first automakers pulling back on their EV plans a little bit. And GM is one of the first that has commented this week on what's going to happen. And they want to be clear that it's not like a complete rollback and everything. They said that the policy changes have caused us to reassess our EV capacity and manufacturing footprint. So that's red flag. Is like, all right, what's going to happen? They wanted to be specific that they are not changing any of the production plan capacity for Chevy, GMC, and Cadillac. So that's their whole lineup basically of EVs right now. So what exists as an electric vehicle, keep going. But they said they're doing a strategic realignment that will cost at least 1.6 billion. So for the plans that they had in place to keep growing their EV production, it sounds like this is being rearranged to adjust the EV capacity down in the next few years. Bad move, probably, I would assume, because you see what's happening elsewhere. You see what's happening in Europe. You see what's happening in China, and it's like, all right, how long are you betting that the US is not going to follow through with that? Policy-wise, in the next 3 years, it's probably a good bet. But after that, though, you got to be ready for some change, I think. Hopefully. So GM is one of the first to press the brake on EV production following the removal of the tax credit.
Yeah, and you know what they did?
Another update.
You remember GM did this
the
last time Trump got elected? They pulled back their EV plans, and that put them back. That pushed them back. GM was kind of ahead of the crowd as far as legacy automakers, and then they pulled back on the first Trump administration, and then all of a sudden they're behind, and they're just catching up to Ford, and they passed Ford recently, and they were doing great, and now they're going to pull back again, which is it's frustrating.
Yeah, the American automaker are more like wishy-washy on that. They will go like they're kind of. I guess American politics is embedded into those companies, so they're just going to follow where the wind blows. But you see a lot of the other way around with the legacy automakers that are not American, like the Honda and the Hyundai of this world and everything. For them, when they look at the American market, which is a huge market for them, they are more about like, all right, like we just want consistency. We just don't want to have to change our plans like that and everything. Like it's true that the reality of the U.S. market is like the EV demand is not as high as in other markets. So you want to, if you have an ICE lineup, you might as well sell it. But it's capitalist world after all. But for them, it's like we cannot get our plans together because obviously, like making a car, electric or not, is an endeavor that is years and years in the making until you can reach volume production specifically. So you need to be sure of like what's going to be the demand there, what's going to be the incentive in place to create that demand, what's going to be the regulation. So Europe, European Union has its problems, but at least it's like a cohesive group together. China is one track mind kind of thing, and if they go one way, they're going to go that way. But the US is like every 4 years it's just switch around. So it's like it's hard to be consistent, and unless you are a company like obviously like Tesla, like Rivian, like Lucid, that you're all electric anyway, so you're like, all right, you go that way. But yeah, it's becoming problematic.
Yep.
All right, Aptera, we've been giving you a few updates every week in the last 2 weeks because they are on the way to get to go public, and they did go public yesterday. And basically, exactly what we said was going to happen last week happened. The stock crashed over 4 million cells, I think. It crashed like 60-70% the first day. I didn't check this afternoon, but it was like down 20% this morning.
Oof.
It closed 27%. It's basically trading around $6 a share right now, and it opened at 27. So it's a significant crash, valuing the company at $185 million right now. So it's going to be hard to raise money. Like now, just before they went public, so that was 2 days before they went public, the 14th, they announced that they secured access to $75 million of financing through what they call that? They call that committed equity financing. So basically, they found this company called New Circle Capital, which I couldn't find a lot about. It looks like a very small boutique firm that they can sell share at a discount on the current market to them, open on the market. So basically, I think it's a 4% discount So they can sell the share at 4% discount, and then New Circle Capital can turn around and try to sell them on the market. That's not a bad deal if the like we said last week, the price needs to hold, but the price is not holding. So now at the $185 million valuation, if they want to raise 75 million of that, that's like a third of the money, the third of the company. So it's a third of dilution, 30% dilution to raise that money. Now they don't have to do it all at once. They can gradually do it as they need the money. So maybe there's a chance we still see Aptera reach production. It's still a possibility, because I think with 75 million or so they could. But like at this point, the problem is like it would be crazy dilution on the market, and the stock would keep crashing. So unless there's a momentum shift and you can in the stock gain some value, I think Aptera is in trouble.
Yep.
All right, we have one more news item before we jump into the comment section and talk to you guys. I see that a few of you already put some question on there. Appreciate it. All right, in Europe, Kia has laid out its plans for production ramp, and it's we're talking about volume production here. So the EV3 has already had quite a bit of success in Europe, and now the EV2 and EV4 are ramping up. And they have some actually decent production commitment here. For the EV2, they are aiming now for 100,000 units to be produced at the plant that they have in Slovakia. And the EV4, it's 80,000, but if you had a few of the other like configuration, like the fastback, and it should be around 100,000 also. So those are specifically for the European market, if I understand correctly. Adding to the EV3 lineup, it's Kia is aiming to be like a volume EV producer in Europe, which is super cool to see. We have a Kia ad on the Kia article. That's cool.
Good job.
All right, let's jump into the comment section.
All right, skeptic. We're all going to pay when this AI bubble pops. So much money and energy being burned, so these tech bros can make funny videos.
Yeah, I mean it is a bit concerning to me. I was just listening this afternoon to Andrew Caperti, who's a very respected person in the AI world, and Tesla's former head of AI and autopilot. And he himself, he didn't go as far as saying, yeah, it's a big bubble and everything, but he did say that like a lot of the agentic AIs that are being launched right now are not actually useful. They're not, and I agree with him. I think I tried a few of them, see if I could get actual value out of them, and a lot of them are not. It's not quite there yet. There's something missing, and a lot of money is getting. You see it every day. There's a new startup getting tens, if not hundreds of millions. So you have the private equity sector getting nuts on that, which a lot of it might not pan out. And then you have the public sector and the public money getting into the billions and the hundreds of billions of dollars into a secular deal that, NVIDIA invest in OpenAI buy chips from NVIDIA, and then same thing with AMD, and then the Oracle deal plays into that, and like it's all a circular stuff that makes a ton of sense if it all works out. But it's a big but. It's a big bet. And another thing I'm a bit concerned about, and I'm trying to do a little more research on this, but I'm trying to see how all these companies amortize their GPUs, because it's these things, if you use them like crazy, which is the goal here, you don't want them sitting in a giant data center not being used. They burn out relatively fast. And
do they burn out, or do they just become obsolete?
Sorry?
Do they burn out? Like, do they physically burn out, or do they become obsolete? Like,
both. Like they like you're using too much energy for them at some point versus the new ones, and I see some companies are being very conservative, and they amortize them over 1 year, which would make sense at the rate that they're improving. So if they do become obsolete within a year or two, makes sense to amortize that fast. But a lot of companies are doing it like 5 or 6 years too, that they think they're gonna get some value. Obviously, if they can, graph it where a lot of the value does go away after the first year, and then you have like very low value. But they're not doing it exactly like that. So I think there's gonna be a lot of permanent charges when it comes to that over the next few years, and also like the energy, just the energy that's going towards that. It's like, who's gonna pay for that? Because they much prefer, like, the ratepayers are gonna be holding a lot of that bag, I think, and it is a bit worrying, especially if you've been watching the energy rates in the U.S. Recently. It's in the last 5 years or so, they've been going up like crazy, and it's just the beginning of this right now. Like you hear all of the announcement of these giant data centers. It's just the beginning.
Yep. All right. Moving on. Skeptic, I read that every single video someone generated on Sora 2 costs OpenAI $5. The videos generate almost no revenue and are seen by almost no people.
I believe $5 sounds like a lot, because I've heard it was around a little bit more than half a kilowatt hour for a 5 seconds video. I guess they did increase the length of the videos that you can make now. So yeah, maybe not $5, but a few dollars for sure.
All right. Altman showed his AI on profitability desperation this week, announcing they will encourage its use for adult activities.
Yeah, I saw that.
That'll be interesting.
Yeah. He's following up on Elon with this.
Yeah. I would is it gonna generate like?
I think the word he used was erotica.
Oh, okay.
So I don't know what counts as erotica these days, but I'm not sure. I want to know.
Good job, guys. We did it. Yeah. All right. Question: would you buy the Bolt over the Equinox and Blazer? That's a great question. No. It depends on your needs. The Bolt is the smallest of those and the least expensive. Equinox and Blazer are both a little bit bigger, a little bit more range. I think Equinox and Blazer both have over 300 miles of range. It depends on your needs, I think. I'm a Bolt owner. I love the Bolt, but if I needed more range or quicker charging, even the new Bolt has not quite as fast charging. I think the Equinox is kind of the sweet spot at the moment, to be honest.
Yeah. Never got my eye on the Blazer much, but the Equinox does make sense, I think.
The Blazer SS was quite a little speedy ride. They took us down to North Carolina for that. That was fun. All right. Any news about the mysterious Powerwall 2 replacements? That could be a very costly liability if the plan is to lie about the known fire risks.
I keep trying to get like a full second source on this, because I have one source that doesn't want to go public with it, and I'm keeping an eye on the recall notice, because I feel like you kind of need a recall notice for in the US, like they did in Australia, because it's the same product. But no news on that front. Keeping an eye on it.
All right. Nice shirt, Fred. That's the Montreal Expos.
Yeah, they just got their documentary out on Netflix. I haven't seen it yet, but apparently it's pretty good. Yeah.
All right, I gotta check that out. I was a big Expo.
They're gonna explain how they stole the Expos from us
and turned them into the Nationals, right? Isn't that what happened?
Yeah, right. Washington's.
All right, what do you guys think about the environmental impact of AI? I heard it's not that much worse than the other tech we already use. So this is a different perspective, but I also heard that the data centers destroy water quality.
Yeah, you need a lot of water to cool these GPUs. So there's a way to make it not to lose too much water as part of the process, but not everyone is being super efficient. And but not as much, not as worse as some other tech. Yeah. I mean, data centers have been around for a long time, and they've been growing because the internet needs are increasing all the time. So it's not exactly new. There's also the Bitcoin mining stuff that increased the energy demand quite a bit. But I don't like. I think it's nothing compared with what is happening right now with AI. It's just a drop in the bucket.
All right, question. Have you guys seen any car manufacturers describe efforts to make their cars have much longer life cycles? Tesla bragged about a 1,000,000-mile battery life, but I'm talking about rust and crash damage. I mean, GM had that 0 deaths, 0 emissions, 0 something else.
Honda also the similar goal.
But yeah, that's kind of a rarity. All right. I wish GM would put some effort into eliminating the stranglehold their dealers have on them. Then maybe I'd buy a Bolt. Instead, they're torpedoing their future by scaling back on electrification. It is frustrating to buy a car from GM. I agree with that.
From several automakers, it's difficult.
Yeah. The price hit was necessary loss to get a solid stock price. It was pretty obvious that people who had lost faith in Aptera would dump their stock at a loss. The stock has stabilized around $6.
Yeah, but like I said, now at $6, you have $185 million valuation, and you need to raise about at least 60 million just to get to production. So that's a third of your valuation. So it's a 30% dilution. It doesn't sound like a good investment to get to production, and then what happens after that? Is the production sustainable? Does the Aptera make sense? I know I want to see the car on the road. Like, don't get me wrong, I really want to see it on the road, but does the car make sense? When you can buy a Bolt for $30,000, like, it's just there is some questions to be answered for sure.
And New Circle Capital committed to buying 75 million in stock. Production.
Yeah, basically what I just said.
Yep. Ford should buy Aptera, according to Carl. Surely, with its eco bona fides, its unmistakable looks, and better value, it could outsell Cybertruck and rebrand EV cars as actually sustainable. I don't think that's going to happen.
I mean, what I could like, what I'd like to see more, and I know Aptera is already doing some of that with some trailer companies and everything, but if they could license their solar technology, because it's not as easy as people think. There's just like put solar panel on the car and they work. Like the optimization of the solar, because of it's not as easy as a rooftop where you can just angle the panel correctly and optimize for that. You have shade that will cover the panels more often than not because of it's a moving target. And if there's some automakers that would have vehicles that would make sense with maybe do a roof, not a rooftop, but a tonneau cover for pickup trucks, for electric pickup trucks. With that, I think that would be cool. So Ford for the Lightning, they could do that, and add that as an option for the Lightning. I think some people would buy that, and it would be pretty cool. Maybe do that with GM with the Bolt. It's a very efficient vehicle. So the more efficient, the more it makes sense. So I think they could see some partnership like that.
All right, the opening price for Aptera stock was laughable for a company with no sales. Let's move on. With 50,000 Aptera pre-orders, there's potentially $2 billion incoming when production begins. Dean McManus is clearly on.
Yeah, but Dean, like it's a $75 reservation refundable deposit. It's we've seen it with the Cybertruck. It's not, obviously Cybertruck, completely different product and everything, and Tesla had its own issues with that. It's not a great show of commitment that you want to order. So I don't, and when the bulk of Aptera's orders, because they haven't gone that much since the first day, they got like 40,000 pretty quickly, or 36,000 pretty quickly. That was like 3 or 4 years ago, and the EV market has changed quite a bit since then. So I don't know. Like, a lot of these people are probably already ordered another car that and they don't want the Aptera anymore.
All right, Carl says the GPUs used for AI are burning out before obsolescence. Heatsink paste dries out, one part starts faulting, and the whole unit becomes trash. No positive but believe it's an issue, not possible. Maybe
I'm gonna have to trust Carl on this because I don't have actual data, but I know that a lot of our companies are amortizing their GPUs over way too long of a period of time.
Yeah, and he says, "Wait, so Australians get a fire risk recall? If so, that's the story." We did report on that.
Yeah, we did that story already, and in that story, I made it clear. It's like, all right, why is it just in Australia that recall? It makes no sense.
Right.
So that's why we've been trying to do a follow-up for a while and just like trying to get more information. But there have been fires other places in Australia. It's not just Australia. It's not clear why they did it in Australia. Like if there's something sad about the situation in the US right now, where especially you see it with the financial scams and crypto scams and the SEC, but it's getting into safety to a certain degree. Also, now is just I think people don't see. They like the police is not around, or at least not for the right reasons. So they think they can get away with things in the U.S. that maybe they cannot get away in other countries that have stronger regulations. If it's that, I'm not saying it is, but if it is, it would be pretty sad. All right, well, that's it for us this week. I hope that everyone enjoyed the show. We're going to see you same time, same place next week. Have a fun one. Have a great weekend. Stay safe out there. Goodbye.